Welcome back, everyone. Our next presenting company is Logiq Inc. It trades on the OTCQX under the symbol LGIQ and is a US-based leading global provider of e-commerce and fintech business enablement solutions. Please welcome its CEO, Tom Furukawa. Welcome, Tom.
Thank you, Anna. And thanks, everyone. It's great to be back on the Emerging Growth Conference. And I'm Tom Furukawa, CEO of Logiq. So let's get right into it.
All right.
I'll pass the disclaimers here. All right, so I want to start. So this is a short presentation, so we'll get to the Q&A. But I want to start with the vision and mission of the company, and then we'll go into a little bit more details of what we do. Our vision is really to create a world where digital customer acquisition provides a level playing field for any company to thrive, based on the merits of their offering and execution. And really, we're in the customer acquisition business. That's what really drives e-commerce. And what I'll show you today is we're hitting a part of the market that's really underserved by advertising technology today. And so in that light, we develop superior customer acquisition technology and services. So we're a software as a service company, and we also have a professional services group as well. And we focus on small to medium-sized businesses so they can compete in a really highly competitive e-commerce landscape. So before I get into the details there, let's take a quick financial snapshot. So if I draw your attention to the right side of the right part of the slide, we've been growing our revenues, year after year. Starting in 2016, we closed 2020 at 37.9 million. And that's been a really great, part of the story of the company. Some of the specific financials here. One thing to note that, in really Q2 of last year, we started to shift our focus away from really low margin businesses. And so you'll see a little bit of that reflected in our financials. But really, the focus was on profitability of the company. So on the revenue side, quarter to quarter, we've increased 3% sequentially from Q1 to Q2 this year to 8.3 million in Q2. So if you compare quarter to quarter from last year's Q2 2020 to now, it's 11% down. But that was a strategic decision we made to really have a little bit less revenue but better profitability. So if we look at the gross profits here, here's where you can start to see our direction, our management decision bearing fruit. And so in Q2 2021, we were up 101% to 2.4 million in terms of gross profit. And so that's been a really good approach and change to our business. And then the first half 2021, up 21% to 4.7 million. And so we've continued to make strides in that direction. And so that's been, again, making that strategic decision to really focus on profitability of the company, as well as increasing our revenues quarter to quarter. It's been a strategic decision, which we're executing on. All right, so let's go into the businesses. So we have two distinct divisions in our company under Logiq. We have AppLogic, and that provides businesses and consumers with mobile app development, logistics, and fintech. And so AppLogic operates very much out of Southeast Asia, where a lot of our customers are in Indonesia and those type of markets. So what's very different between those two? So we have Logiq, which primarily operates out of North America, and we help small to medium-sized agencies and brands with e-commerce marketing software and lead generation services. So if you take a look at these two parts of our business, they're very different. One is in emerging markets. Logiq is in North America. AppLogic is focused in fintech and hyperlocal delivery, whereas Logiq is focused on ad tech. And so one of the key decisions that we announced is to spin off AppLogic as a separate entity. So I'll go into a little bit of what that means. So AppLogic, if you take an example within Indonesia, where it's a very crowded urban areas where it's really just driving a mile, for example, can take hours. And so we have a platform within AppLogic that enables pedestrian hyperlocal delivery. So if you're in a tall office complex somewhere, you can go on your AppLogic app and order food, and someone down below will go and grab that food for you. It's kind of like Postmates in the US, but it's done by either walking or bicycles or little motorbikes. And then we have a full fintech and mobile payment solution that rounds that out. And that business has continued to grow. There's a lot of different use cases that we're experimenting with. But as a company, it has two different directions between AppLogic and DataLogic. And AppLogic is about roughly 30% of our revenue, or DataLogic is 70%, both growing. And so we made a strategic decision to spin off AppLogic, and we're going through that process today. So what that means for Logiq shareholders is that AppLogic will be spun off into a public entity. So there'll be shares, ownership shares within AppLogic, available to Logiq shareholders. So we think it's a very good thing for shareholders. It's also a really good thing for Logiq, so that we can really focus within the ad tech marketplace. All right, so with that, let's go into DataLogic. And so, we'll be launching a whole new brand and look and feel coming up. But one of the things I wanted to do with you is take a step back and kind of take you through really the business that we're in, that's ad tech. Programmatic advertising is another way of looking at it, but it's also very complex. I wanted to really tell the narrative here of how it actually works, so you can understand the business that we're in. So programmatic advertising is actually like a regular auction, if you will. And so, in an auction, I'll kind of start from the right side, or the blue. So you have basically people who are selling stuff, right? So in terms of programmatic, people are selling advertising inventory in the forms of, let's say, a video, or some kind of a program on a connected television, websites, mobile apps, so on and so forth. So they're selling that inventory. On the left side, in the red, you have advertisers who are bidding on that inventory, just like a regular auction. And you have the auctioneer in the middle that basically takes the highest bid and sends that over and to the correct content that won that advertising spot. So that's effectively works just like a public auction, right? The difference is that this whole mechanism is done programmatically. The other thing that I want to note is on the top left. Now, because the auctions are so expensive today, and also the technology to be able to participate in programmatic is so complex that it leaves out a huge segment of the e-commerce marketplace that cannot participate in these public auctions, and I'll go into more details why. All right, so now if you start to layer on a little bit of the technology here, so you have on the right side audiences and publishers, right? These are the folks like CNN or content that appears on Hulu. So this is the actual advertising inventory. And then publishers on the blue, on the right side, they connect to what's called a supply side platform. So that's a system that actually manages that inventory for them and participates in the auction. And on the left side, you have advertisers and agencies. In the red, and they work with what's called a demand side platform that manages their advertising and also helps basically win auctions and place bids on inventory. And so the DSP and that sort of layer between agencies and the yellow exchange, this is where DataLogic plays. Now, if you take another drill into the technology itself, this is where things get pretty complicated. On the right side, it's not as bad for publishers. They still put their stuff into an SSP. There's ad servers that help them manage their inventory, but that technology is still pretty similar through the years. The left side, where things got really complicated, so you have agencies and advertisers now are connected to an ad server and a DSP, but there's also things called like the CDP, a customer data platform. And you have DMPs, which is data management platform. You have CMPs, which is a content management platform. And so as an agency, you have to have all these technologies all working together to be able to succeed in an auction. Therefore, meaning the small size agencies and businesses, they don't have this kind of infrastructure, and that's why they can't participate today. Or they have to pay a lot of money for a channel partner to handle it for them. But when you don't have direct access and management of your campaigns, it's just not going to work well. So here comes Logiq. And what we have done is consolidated into a single platform all the different technologies you would need to participate in the auction. And so we've dramatically lowered the cost of operations, so small to medium-sized agencies can participate. They can compete just like the bigger guys. They have visibility into how much it takes to be able to win, specific kinds of inventory. They have the data that they need to be able to target the right audiences. And so at the end of the day, being able to onboard small to medium-sized agencies has been a lot easier. And we're continuing to grow this part of our business. So this is a pure software as a service platform. And so if you're in the industry, people refer to as a demand side platform, with a data management platform and a customer management platform. All right, so let me go into a little bit of the marketplace that we're in. Now, programmatic advertising in 2021, this is according to the IAB report. So it's 28 billion in ad spend, which is taking up 68% of digital advertising. So it's a massive market. Now, if you look at this pie chart here, what's crazy is the top 500 brands in the US control 70% of the e-commerce marketplace. So you have this 33%, the rest of retail here. This is probably about a 500,000 customers, 500,000 companies that's trying to compete against the big guys, and they cannot based on, the access to technology. So this is where Logiq can come in. And this is that left side of the pie, the rest of retail. This is our market segment, which is humongous. And so the solution on the right side for Data Logiq is really two pieces. I talked about the services part of it. So we have a lead generation service. So this is a professional services team, and we're in specific verticals. Some of them would be things like home insurance, auto insurance, Medicare. We have refinancing, home mortgage refinancing, solar, to name a few. So we're specific offerings within those verticals, and we have clients that we basically generate leads for. And then on the software to services side, we have the digital advertising and data management software we just spoke about. And so we have access to inventory on, say, CNN, Forbes, Reddit, ESPN, Hulu in terms of connected TV, Roku, for example, audio advertising on Spotify and other channels. This is just a few of some of the brands that you may recognize. And so this is a big part of our growth strategy for the company, is to really focus within ad tech marketplace with our Data Logiq solution. So my last slide, just go over a little bit of our statistics here. So this is a snapshot of yesterday. We're trading at 275 on the OTC. If we have any Canadians here, we're also on the NEO as well at $3.42. So our stock has been up as high as 14, as low as $2.03. So you can kind of see the upside opportunity there, and our volumes continue to increase as well as more and more people learn about us. So one thing that's interesting is a company like us in our comps, we are definitely undervalued here. Where some of the other companies are trading at much higher multiples, and right now we are continuing to invest in our business. We have plenty of cash to run. Our numbers are looking good. We have the Q3 earnings coming up, which I can't say too much about, but all in all, we're running a great business here, and I hope you like to learn more about it. All right, so that's the last slide that I have, Anna. So I'm ready to take some questions if there's some.
Great, we do have some questions for you, Tom. Okay, Lou Moore says, you mentioned that you're spinning off Logiq. Can you elaborate on why you are spinning it off?
Yeah, so at the end of the day, coming in, so I came in as CEO. I've been on the job for a little over a year now, and running a technology company, especially with the stage that we're at, focus is key. It's really tough to, run a ad tech part of the business in North America and focus here, and then have a, fintech, a logistics technology in Southeast Asia. It's just it's really a two-headed monster here. And as we start to see, where should we focus in the company that has the best growth, both in terms of revenue, but also profitability, it's ad tech, and clear. So, we're able to do this, which is great. We have the management experience, and also, help of a lot of other partners to be able to, spin off Logiq into a public entity. At the end of the day, I think if we have, Logiq, for the shareholders, and we have Logiq, or kind of whatever it ends up being as another public vehicle, I think it'll be very beneficial for shareholders, and also it'll really help accelerate the growth of Logiq.
Can you talk about the timing of AppLogic spinoff? Asks Alfonso McNeil.
Sure. There's I think I would say a lot of things in place today. These things aren't easy, but it's also not super complex either. And so there's companies like us who've done this, and there's public vehicles already available for a spinoff like this. So we've identified those. Our target is to complete that by end of this year. And so, it's a target. It's not a promise or, something that I can, say 100% confidence, but that's our target. And we're moving toward that direction.
Are you going to uplist to the NASDAQ? And if so, when?
Yeah, great question. I think everyone's excited about that. And, one of the reasons why we did the NEO IPO is to really make that transition easier for Logiq. So what I can disclose is what we've announced is we filed for our S3 and got that approved. And so if you're familiar with IPOs and uplists, S1 is for IPOs, S3 is for an uplist. So I think you can visibly see that we're making progress there. We've announced a banker that's supporting us as well, and so we are well on our way. In terms of timing, it's hard to say at this point. Sometimes it's pretty quick. Sometimes it takes, let's say, 3 to 6 months. Somewhere around that time frame. I've seen companies uplist from the OTC to NASDAQ, but I think what we'll end up doing is announcing more things coming up as we hit certain milestones.
Brooke R asks, how is the second half of this year looking in terms of revenue, and who are your closest comps?
Sure. So we're having our Q3 conference call coming up in November, if I'm not mistaken. So I can't go too much into the numbers. What I can say is that going back to really changing our strategy of Q2 2020, finally in Q3 we can actually do a quarter-to-quarter comparison, apples-to-apples comparison of Q3 2020 to Q3 2021, like most analysts do. And this is where I think as Logiq, you really start to see kind of the difference and improvements we're making into the business. And so that's as much as I can say about the numbers. Hopefully you can join us on our Q3 conference call.
Yes, go on. Sorry.
So in terms of comps, I would say in the pure ad tech play, I think Acuity Ads, I think their ATY is their stock symbol. They would be one to compare us against. Now I think they've listed at the TSX, if I'm not mistaken, have done I think a NASDAQ IPO. So they're dual listed similar to us, and they're in the DSP space similar to us as well. I think last I checked, they're trading around $6.52. I think like almost a $400 million market cap. So it's interesting to see them compared to us and what we can become. Another company is Media Alpha, MAX, I think is their symbol. So that's a bigger company. They're solely in the lead gen business, kind of very similar to our professional services side, and they're a 730 million market cap, trading at like around 18.5, if I recall correctly. So yeah, take a look at them, compare them with us. Now we want to become the trade desk for mid to small size companies. So I think the gorilla in the space is the trade desk. You look at them, look at their numbers, look at their revenue, look at their margins, which is insane. That's our goal. We're kind of modeling ourselves on what they've done.
Elaine A asks, are you planning on any additional acquisitions?
Yeah, great question. We are looking at a lot of strategic acquisitions, and also acquisitions that's going to add to our bottom line as well. One of the things that if you followed us since last year, we've been very good at identifying, acquiring, and integrating companies. So we did Push Interactive. That was sort of the first major acquisition, and that really becomes our Logiq consumer marketplace, our lead gen services business, which is doing really well. And then we've acquired Fixel, which is an AI audience segmentation tool. And so we've now incorporated that into our DSP platform. So that's been a very good acquisition for us to get that AI technology to understand really the probability of someone buying or basically taking an action, which is a key part of our platform. And then Rebel AI, so that was completed in March of this year. And that's the platform, that's the demand side platform, the DMP, the CDP that we launched in April. And we've been adding more and more agencies to that platform. And that's really going to be the foundation of our growth there. So I think we've shown a pattern of good acquisition against our vision and mission. But I think what's different for next year is that we're going to look for something much bigger that can be both revenue and also customer accretive to the company.
Great. Jamal Pope wants to know if you have any patents.
So yeah, we have some patents around our AI system, and we have a few pending as well. So it is a kind of core part of our business, and we're always looking at other technology we're building in house and being able to patent those.
Ronan Jones asks, can you go into the sales of your subsidiaries on a percentage of the whole?
Yeah, the best thing I could say here is how we report on it. So we report on overall company revenue and AppLogic and DataLogic. So DataLogic is 70% of our revenue, and AppLogic is 30%, and that's based on the latest reported numbers.
Okay, Jan Huff asks if you can talk about the difference in costs of your platform around the world.
So yeah, that's a great question. So when it comes to digital advertising platforms, there are transparent costs, and then there are non-transparent costs. I think that's very, very important. Now, when customers come in, they spend a certain amount of money on our platform, we charge a flat percentage fee. And so from that perspective, it's easy for them to do business with us, that they know that if they spend, $100, they're gonna, we're gonna charge 15% of that. They spend $1 million, we charge 15% of that. And sometimes it depends on the customers, and it could be higher percentage or lower percentage, kind of based on how much, I guess, help they need from us. But it's very clear and straightforward. There's other platforms and other channel partners where the fees are less transparent. I think that's been a huge frustration for a lot of agencies, where imagine ordering a bunch of stuff in the restaurant, and then you get the receipt and it just says food on it, right? It's kind of like that, traditionally in ad tech. So that's something else that we're, I think, driving toward, is that transparency is something you hear all the time from platforms. We actually live and breathe that, because I think it's important to know exactly where your media dollars are being spent.
Brian Hayes asks, he says, I see your loss has been cut in half. When do you expect to go positive earnings? And do you have any plans to raise any money in the near term? Yeah, so profitability, I think, is I will say positive EBITDA is something that I think we can achieve by really controlling more of our costs, but also it's not right now the key goal of the company. I think we can get to profitability probably sometime late next year, or in our or 3 years from now. But it's a decision that I think we can make at that time, if it makes sense. We're at the growth stage. So for me and our management team, it's really infusing lots more capital. We still have a lot more hiring to do. We got to build out more of our marketing and sales organization. I would say from a DataLogic perspective, we're still relatively new, right? I think that's the interesting investment opportunity for folks, is to really help and kind of ride that growth with us. So I think that's gonna the key area that we're focusing on. In terms of raising money, so for NASDAQ uplist, definitely that's one of the key things, is as we don't want to just uplist for the sake of being on NASDAQ. We want to have good financial backing behind it, and so we'll do a fundraise based on the uplist timing. Thank you. Shay W says that she remembers you from the last time you presented here. Can you discuss how your technology works with social media? And is there anything like how Facebook, what they might do with their algorithms that affect your products? Yeah, so it's that's a great question. So
The thing that's actually different is, so we use Facebook for example. When I mentioned that that 500,000 customer base that don't have access to programmatic platforms, they're primarily either using Facebook or Google Ads. And as you can imagine, it's a highly competitive market, right? So in Facebook does a great job of understanding and how to target audience, and also understanding what content people are looking at, right? Their algorithms are quite good at that. But at the end of the day, a lot of the companies that's advertising are actually, paying for targeting on similar audiences, right? It's a lot of, if you're an e-commerce company, you're going to look for people with certain high incomes living in urban areas that have certain interests around the products that you're selling, among hundreds of thousands of other advertisers competing with you. So it's still, at the end of the day, it's harder for small companies to be able to compete, in that social media environment. This is why us coming in and giving them a whole new set of channels, like you can't get to CNN.com, you can't get to Hulu, you can't get to Spotify, through the social platforms. So I think that's going to be the key thing. I would say the key differentiator is both the affordability, the cost of programmatic versus social, and also being able to hit the different channels that that's not on social, right? And that's, I think, that the biggest change today is, Facebook's been great, but you can only target on Facebook. You can only get to people when they're on Facebook or Instagram. Now, it still works wonderful, and it's it's a good algorithm, but it's very, very expensive. I have yet to meet an e-commerce company, small to mid-size, that actually is profitable, to like really, really good profits running just solely on social. You got to do it because that's what you have access to, and you have to kind of upsell or do more of like the CRM and email and that type of activity to really get that positive ROI. Whereas programmatic done right, you can actually have a positive return on ad spend right off the bat.
Aaron Weiss asks if you currently have an offering to raise any money.
Yeah, so we do, and that's part of the NASDAQ process. And so I think it's for us, we have plenty of cash right now to run the operation, and really a part of the uplist, really where that the next set of funding is going to come from.
Vipin Susalan says, in Q1, why do you think the market is not showing confidence with your current press releases and improving prospects? He says share prices are around 5% down today. So Q2, question 2, will the continuing sub $3 SP affect the planned NASDAQ uplist? Sorry if I didn't ask that correctly.
Yeah, it makes sense. And I think this is, I guess, alluding a little bit to the I guess the upside opportunity. But yes, so the $3, is the goal now. We've heard it's not a hard and fast rule, but definitely, it needs to get there. And I'm very confident that it will. But at the end of the day, we have a lot of short sellers, and I think that's what hurts the stock. And this is why, I'm here, saying like, this company is on a trajectory, and I'm looking at, really 5 years of growth for the company with the kinds of things we're doing, the customers we're adding, increasing profitability, and also looking at some, M&A activities. But that's the part that's tough, right? Being in the OTC market is, people take tiny profits, and it weighs down on the stock. And so, at the end of the day, I think it'll be wise, right, to not do that. But I can't control retail advertising behavior.
Thank you for answering that. Adam Navarro says, can you talk a little bit about your recent simcasting press release and how that will benefit LGIQ financially? Yeah,
that's a great question. I'm glad someone asked that, and it makes me happy that people are seeing our press releases, especially around the product one. So simcasting is kind of cool. I'll just do a quick scenario. So many businesses today in e-commerce have a CRM system, right? So if you buy something, the CRM system holds your contact information, your email, your shipping address, and that type of stuff. Now, today, it would be wonderful if those small businesses can take that information, make it anonymous, but be able to target them online. That'd be kind of cool to do. Simcasting allows you to do that. So that integration, because we're going after small to medium-sized businesses, now you can take the information that's in your CRM system, you can upload that into Logiq. So with the simcasting capabilities, we can make that anonymous, but be able to target them, on websites and mobile and CTV and so on and so forth. And so it's a great way to do some remarketing. And also you can create these lookalike audiences as well, right? So there's certain type of profiles that you can basically kind of clone, if you will, and be able to target people like my customers. And that's a really great tactic that now you can do. And so all the things we're doing, so around things like simcasting, we also announced Iris TV, which gets us across all of these connected TV channels. We've done data relationships. We have a few more that's on the ready to release. Some exciting integrations as well. All these things is really enabling small to medium-sized businesses to be able to target the right audience and do it at an effective cost. Now, at the end of the day, it gets more media spend. The more features we have in our platform that look like the enterprise type of capabilities, we can get more and more ad spend going. And that's the name of the game here, is getting more ad spend going. And also there's a percentage that we can also take, through the use of these additional technologies.
Jack Olson asks if you've given guidance or do you plan to in the future as far as your quarterly earnings go?
Yeah, in terms of guidance, I would say we have one of the companies, if I recall, Phase 4 Research. So they've published some guidance for us in looking at where we're going to end with 2021 into all the way up to 2024. So we're looking at that as kind of public guidance today, and I think to me, I'm not worried about that. I think as we move forward, we may give some, but right now I'm just really relying more on external research analysts to come to their conclusions.
Great. Well, Tom, do you have any closing remarks?
Yeah. Well, again, thank you. This has been great. Great questions, by the way. That was really, really wonderful, and it makes me happy that people are starting to discover Logiq more and more. What I want to say is, look at the comps, look at where Logiq can be, and really, I'm taking a longer view of the company. And even though it's always nice to get a nice quick profit, it's going to be, I think, really great to kind of stay long with us. We're in an incredible marketplace, right? Just in terms of the overall market of digital marketing is insanely big and growing. Just connected TV, as an example, 2021, they're forecasted at $13 billion market for connected TV advertising. And that's going to grow to about $27 billion by 2025. So we're in an incredible market. Software as a service is where you want to be because the margins are so good. And again, we're in our early days, right? So we launched the platform in the beginning of April. Our professional services team, Logiq, our consumer marketplace, is doing really well and continue to grow, and we're adding more and more verticals to our lead gen. And at the end of the day, we're starting to run a really solid business that's very predictable. And so as we stabilize and grow our Logiq consumer marketplace lead gen business, we've launched and are growing our Logiq digital marketing platform. So I think it's a great combination. We're in ad tech, martech, which is a wonderful place to be, and have a great team, great management team, and we're continuing to grow our rest of the company. So,
great.
So yeah, I think that's everything.
Well, that was a great presentation. Yes, lots of great questions. So thank you so much for your time, a really wonderful service you provide, and we look forward to you coming back onto our conference and giving us some updates. Thank you, Tom.
Sounds good. Well, thank you, Anna.
All right, everyone, we'll be back at the top of the hour. We've got a few minutes of a break, and we'll see you real soon. So see you at the top of the hour.